Matt. Always great to get your insider views, which have been spot on so much lately here. Do you expect more weakness for big technology ahead?
Yeah, I do think we will see it. And like you mentioned, I don't think it's going to be the biggest thing in the world. I mean, well, first of all, a lot of people, I think, are looking at this 50-day moving average on the S&P 500, and that's important. But as you mentioned, I really am looking at these mega cap tech stocks. They're the ones that took the market up. They're the ones that are bringing it back down. If Facebook did close below its Tuesday lows, but all the rest held above them. So if we break below those, I think it's going to cause some further problems. But again, these stocks had unbelievable runs. I mean, to give you an idea, just on two names, I don't think they're going to fall this far, but Apple Computer, it could fall another 25% from where it is right now, not from the top, and still be above February highs, what everybody was talking about was such a great high. And NVIDIA could fall 35% and still be above those highs. Now, I don't think either stock will fall that much further, but they will. There's a good chance they'll fall further. They kind of moved up in parabolic moves. We've heard all about the situation with some of the Robinhood trader, and especially in the options market. And so some of that artificial buying needs to be, and froth needs to be worked off. Again, it's normal and healthy. The problem is the market was such a big rally that this kind of pullback will be scary this time.
Well, that's why context is key. And we said at the top of the show, Matt, that we're still up 22% on the NASDAQ year to date. And if we look at some of the fastest corrections in market history, they were in the best market years. In other words, if you're driving down the highway at 85 miles an hour, don't do that, by the way, but if you were to do that and you're going fast, you're going to have to brake faster as well, right? And it feels like that's the way the market goes. Momentum is hot on one side, but it means you're going to get the fast, hot moves on the other side as well.
Absolutely. And, especially when you get to the situation where, I mean, the one thing we have to worry about is the market, of course, got to a very overvalued basis. We all know valuations are a horrible timing tool, but they do create much higher risk. And therefore, we got so frothy on so many different levels. In other words, not just technical levels, but also on valuation levels, that we need to come back down and get a little bit more common sense into the marketplace. The most important thing to know is that stocks like Microsoft, Apple, NVIDIA, you go down the line, they're all great companies, but sometimes great companies get so far ahead of themselves that they can induce these serious corrections. We've seen it in all those stocks many times in the past. We'll see it more in the future. That's what we're seeing now, and I just think people who want to buy on weakness, you're going to see more of it before it becomes a great buying opportunity.
Well, futures are in the green right now, but what do you make of the fact, Matt, and we pointed this out, that NASDAQ futures, which were always, about a third of the Dow normally, just in terms of the number, are now often, they're not higher than the Dow right now, but they're close. NASDAQ making these outsized moves, does that say more about the Dow or does that say more about the NASDAQ?
Well, it probably says more about the NASDAQ, but it also has something to do with the split in Apple Computer. If Apple Computer hadn't split, the Dow would be much higher. The Dow futures would be much higher this morning, and that big contrast wouldn't be quite the same. So I think, again, it's more of a technical factor than anything else. But it's still a major part of what's going on in the marketplace. Everybody's believing that tech is going to solve all of our problems, and that's not always the case. We just have to keep the relative valuations, keep them a little bit more sane than they were, say, in August.
When do you believe that the market is going to start to turn its attention toward this election coming up November 3rd? Because we're already seeing options activity in the late October, early November. A lot of options bets being placed on. The market appears to be pricing in volatility, perhaps a contested election. We've been focused so much on COVID and the stimulus. When does the election really start to come into market focus?
Well, it's really starting to already, as you mentioned, with these bets in the marketplace. And, the market, some people were trying to say the Biden victory. I mean, long term, who knows? I mean, the Democratic, we've heard many times in the past, Democratic presidents, the market's actually done better under Democratic presidents than Republicans if you go back to the last 50 years. But the thing is, on a near-term basis, Biden is definitely going to raise corporate taxes, probably going to raise the capital gains taxes. That's not good for the market. And so we're going to so in other words, all this talk about options and the Robinhood trader, that certainly played a big role in this decline. But now we're starting to get the politics are also playing a role. That's kind of in a backdrop. Not only that, also this whole fiscal fiasco is becoming a problem. You know, when the skinny deal kind of got pushed aside yesterday, that was one of the catalysts for the big decline. And in a weird way, I almost hope the stock market does go down another 10% or more, because that'll force the people in Washington, D.C. They need to get some more blame going before that they really get off their dust and get something done on that fiscal front, because people not going from $600 a week to zero, that's not helping the economy.